Are you a small business and currently paying way too much tax in your BASs at every quarter? Let me show you how to reduce your BASs the right way. The business activity statements are quarterly reports you lodge with the tax office, and it enables the tax office to collect the taxes for the company or the business that you're running on a quarterly or monthly basis. That way, you don't pay a huge, hefty amount of tax at the end of the year. Business activity statements cover three main different types of taxes for the business. So the first one is the GST. So that's goods and services tax. That's just the 10% tax that's on your income, and the 10% tax on your purchases as well. PAYG withholding, it's basically the employee taxes. So when you pay your employees, your employer obligations is that you have to withhold a bit of tax to pay to the government. And then you got your PAYG income tax. Very similar, but PAYG income tax is company tax. It's just the profit tax that you need to pay for the year. And sometimes you'll prepay that amount. Basically, your BASs could be quite high because of those three main taxes. And we got to look into the three main taxes and double check that. Are you paying the right GST? Are you paying the right PAYG withholding? Or are you paying the right PAYG income tax? Because those three things are calculated. They are most likely calculated by your accountant or the person doing the business activity statements. And it may be done incorrectly or may not be done that accurately, because business situation changes. You know, one year you could be making this much money, one year you could be employing this many people, and one year you could be invoicing this much and you're not doing that anymore. Or just your general structure of the business has changed. So your GST or your PAYG or your PAYG income tax shouldn't be the same. So the first thing you got to look at is GST. Are you paying GST on accruals or cash basis? So cash basis is when you pay your GST when the money comes into your bank account or when you receive the money. But accruals is you pay your GST on when you invoice the client. So when you send the client or your customer an invoice, that's when you pay the GST. So you don't actually have physically received the money yet at times. So you could have invoiced someone 100K for a project, you haven't received that amount yet, and then you got to pay that 10K to the government before you even receive that amount. So you could wait 60 days or 30 days, depends on your terms, it depends on when the client pays you. So you got to look at that. Should you be on a cash basis or you should be on accruals? Cash basis is always, most of the time, probably around 90% of the time, better for cash flow purposes. Then you got your PAYG withholding, which is your employee tax. Employee tax could be high as well because you're paying way too many employees. Can't really change that, but you should look at your director's wage or the wages that you pay yourself. If your business isn't generating the amount of profit that you think it should be generating, should you really be paying yourself 100K, 200K and paying taxes or withholding tax for that much? You should really be looking at that or speaking to your accountant and maybe even reducing your wages or increasing your wages, it just depends. The last thing is your PAYG income tax, which is the income tax on the profit of your company. So the profit of your company, if you generate this much money, the tax office would always ask for you to pay 30% or 27.5% tax. But how do they calculate that PAYG income tax? They look at last year's profit and how much tax you paid, and they add a bit of extra for inflation purposes, and then they make you pay a very similar amount from last year. So you got to look at it. Are you actually generating the amount of profit that you made last year? If you haven't, then maybe you should actually think about varying that pay-as-you-go income tax and telling the tax office that you're actually making less than what you were making last year and you should be paying less PAYG income tax. And that's how you reduce your BASs. You should really look at your GST, which is the first thing. Are you on cash or accruals? Your PAYG withholding, are you paying your employees right? Are you paying your employees too much, or are you paying yourself way too much? And then the last thing is looking at your profits of the business. Are you generating the same amount of profit that you generated last year or the year before? You should be actually reducing that and paying less, because at the end of the year, you don't think you're going to be making that as much as you thought you were. So you shouldn't be paying the income tax beforehand for that. And if you're still having trouble paying your BASs, don't worry too much. There's also payment plans that you can work with the tax office. You just got to make sure that you meet your payment plan as well as meet present and future obligations like your future BAS. So you got to be very careful with those three things. But yeah, definitely look at those three factors as well as payment plans that could help out.